Welcome to TVFeatures.com. It's Wednesday, February 6th. I'm Remy Hoki for your commodities recap. In energy, NYMEX crude oil futures pulled back, ending the session near the $75 a barrel mark. Earlier today, the EIA reported that crude inventories climbed 7 million barrels in the latest week. This is the fourth consecutive week for a rise in inventories. March crude hit an intraday low of $86.80 and closed out the day down $1.27 at $87.14 a barrel. In other petroleum products, March RBOB gasoline fell 2.48 cents to $2.23.99 a gallon. March heating oil fell 2.77 cents to $2.41.88 a gallon. Meanwhile, March nat gas futures gained 5.2 cents to close at $7.0994 per million BTU. U.S. nat gas inventory data will be released tomorrow morning at 10:30 a.m. Eastern Time. This afternoon, I'm joined by John Kilda from MF Global. He'll weigh in on energy futures and also give us his short-term outlook.
We had a significantly bearish inventory report this morning as the government put out and announced a significant increase, especially in crude oil inventories. The 7 million barrel build was well above expectations, as was the builds that we saw really across the board from refined products as well. We had a very strong import week, 10.5 million barrels, which was able to run headlong into a very low refinery operations week, which we saw a sub 84% of capacity utilization. Exacerbating the entire situation today was a diminution in gasoline demand for the week, a third week in a row where we've seen numbers below 9 million barrels per day, which is significant. This to us is an indication that the consumer is being worn down and is pulling in their horns not only at the retail outlets but at the gasoline pump as well. As a result, we saw a significant weakness in energy prices. Crude oil down over $1, refined products down close to 3 cents. We are expecting this weakness to continue. We are right now pushing on a band of support that's between $86 and $87 a barrel in crude oil. We do believe the economic data is sufficiently weak enough to help us break down through that rather quickly here in the coming sessions and week or so. We should push down to about $80 a barrel, where we see significant support from late last year. Similar price pullbacks should occur in heating oil and RBOB gasoline. Likely to see RBOB gasoline get down as low as $2.15 in the front month and a potentially low of about $2.25 to $2.30 in heating oil. All in all, the surge that we saw at the end of the year up to the $100 barrel mark quickly turned around on now two successive employment reports that are showing contraction in the employment sector. Big spike in continuing jobs last week, and the non-manufacturing ISM number the other day continuing to feed the bearish tone to the marketplace. Also meeting uptick in production by Iraq and by all of OPEC for that matter, and having that oil flow here now that we've turned the corner into the new year. So there's significant pressure weighing on the complex, and it looks like the run for oil is over for sure now, and with the dollar potentially strengthening here against the major currencies and a potential rate cut coming from the ECB, also should feed into lower crude oil prices.
That was John Kilda from MF Global with his commodities commentary. And taking a quick look at precious metals, gold futures surged in today's session up above $900 an ounce. In the previous trading day, gold settled down at $890.30 an ounce. U.S. dollar strength as well as some safe haven buying was seen on the day. April gold gained $14.70 to end at $905 an ounce on the NYMEX. And that wraps it up for your commodities recap. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on TVFeatures.com.